let me ask you a question philosophically. An industry gets this big in terms of its market valuation. Doesn't it begin to consolidate? Don't we have begin to see rules and regulations and countries controlling it? Can it still be this frothy into the future?
Potentially. Let's take that piece by piece. First, the consolidation. I think you're seeing most of the value in crypto come from two things, Bitcoin and Ether. And Bitcoin is really the larger of the two by a lot. So there are still a lot of crypto coins out there. Some last years and struggle along, like Dogecoin, let's say. Others last a couple of weeks and then just everybody loses their money. So this is still a bit of a wild west out there for cryptocurrency. Bitcoin, though, I mean, goodness, it was sort of almost common knowledge that Bitcoin would top out around 60,000 and then fall and then come back, and really not for the faint of heart, but it did seem to have a top. But again, post-election, what have we seen? It's just gone way up. And now it's, as you and I speak, about $100,000 for a single Bitcoin.
Hi, and welcome to the Silicon Insider podcast. Hey, Scott, how are you?
I'm well, watching all these earnings come in.
Yes, indeed. Well, let's start with some amazing, even unimaginable sums of money. This week, Elon Musk's net worth jumped to more than $400 billion, making him the world's richest person. I predicted a decade ago that sometime in this decade, the world would see its first trillionaire. And well, we're about halfway there now. So you think we'll make it? And what do you make of Musk's ability to turn ideas into money? I mean, even X seems to be doing pretty well. I mean, the guy's putting up giant rockets, the largest, bigger than the Saturn V, that are being caught in midair. And now he's going to take on the federal bureaucracy. I mean, this is an interesting period in American life. I mean, we haven't seen a robber baron this wealthy since John D. Rockefeller.
Well, right. And Musk recently has vastly increased his wealth. I mean, you talk about investments made in things like Tesla and SpaceX. Obviously, he's big into investing in crypto. But I mean, has there been a better investment, just in pure return on investment in modern history than his, and depending on who you read, somewhere between $130 and $250 million invested in the Trump campaign? Trump wins and Musk's value goes up by close to $100 billion. That is a staggering return on investment. And
Zuckerberg and a few of these other people put real heavy money into the last election, didn't get nearly as much of a return on investment as he just got.
No, I mean, if you think about it, they are still, and their companies are still considered, for whatever reason, liberal companies, if we're sort of breaking it down that way. Musk, which is literally fighting climate change, is somehow now considered a conservative company and therefore bound to benefit from less regulation. We don't even know how yet, but Tesla stock has soared since the election over the last month, and that has put just gigantic amounts of money into the coffers of Elon Musk. And then it's a little harder to figure out dollar-wise because it's not public, but SpaceX is also looking forward to a future without regulation. We can also assume that Musk is holding a lot of Bitcoin. We've seen what that's done since the election. So that 400 billion might even be a bit conservative and closer to your trillion-dollar wealth individual.
Well, let's take another big number. This would amaze me because we've been downplaying it for years now, but this week, the crypto industry market cap reached $3.7 trillion. It is now bigger than the GDP of France, and it kind of wavering around there, but also the United Kingdom. And next up are the GDPs of Japan and India. Now that's what you call frothy. But let me ask you a question philosophically. An industry gets this big in terms of its market valuation. doesn't it begin to consolidate? Don't we have begin to see rules and regulations and countries controlling it? Can it still be this frothy into the future?
Potentially. Let's take that piece by piece. First, the consolidation. I think you're seeing most of the value in crypto come from two things, Bitcoin and Ether. And Bitcoin is really the larger of the two by a lot. So there are still a lot of crypto coins out there. Some last years and struggle along, like Dogecoin, let's say. Others last a couple of weeks and then just everybody loses their money. So this is still a bit of a wild west out there for cryptocurrency. Bitcoin, though, I mean, goodness, it was sort of almost common knowledge that Bitcoin would top out around 60,000 and then fall and then come back, and really not for the faint of heart, but it did seem to have a top. But
Yeah.
again, post-election, what have we seen? It's just gone way up. And now it's, as you and I speak, about $100,000 for a single Bitcoin. Where it goes from here, who knows? As to the second part of your question, the regulation part, I don't know if it'll see more regulation, but it may get more, I don't know if respectability is the right word, but we've got these incoming members of Trump's administration that are really pro Bitcoin. I mean, David Sachs, for goodness sakes, these are people who have a ton of Bitcoin, therefore a ton of
Interest.
yeah, right. I mean, they've got
Yeah.
they've got skin in the game and therefore conflict of interest, but they have a lot of Bitcoin and they want to see Bitcoin do well. And Trump went from not knowing anything about Bitcoin to all of a sudden being a big fan. So I think you have a lot of momentum. And so where does it go from here? I don't know, but it's just gotten so high so fast.
Well, let me make a suggestion where it goes. A bill was introduced in the Texas House of Representatives Thursday to establish a strategic Bitcoin reserve, which could serve as a proving ground for the U.S. Treasury. And according to the bill, it would start building this Bitcoin reserve by accepting taxes, fees, and donations in Bitcoin that would be held for a minimum of 5 years. And it's the Republican state representative who introduced the bill has a perfect name for a Renaissance, financier, Giovanni Capriglione. You know, he has it's kind of a Medici name dealing with kind of a Medici kind of money. So it seems perfect, but it sounds like the Treasury's talking to somebody about maybe a Bitcoin reserve somewhere out there.
Right, which would add legitimacy, but we've often seen ETFs now that deal with Bitcoin. Even the big banks are getting in. It was one of those things that for the longest time, big banks and other legitimate companies wanted to keep their distance just because it was A, very volatile, and two, not at all insured, and therefore you could just lose it. And
Right.
that puts fear into the heart of any organization that deals with fiat currency, with dollars, which is backed by
Sure.
the federal government. But now you're seeing the big banks get involved. You're seeing ETFs. You're seeing incoming administration members saying, hey, we love Bitcoin. It's got more legitimacy. And I think that only goes up because people are going to be talking about it more and more as an asset class that people will say should be in your portfolio, even though it is so risky and not backed by the federal government.
Well, do you see this bubble continuing for the next 4 years?
It's hard to say. I mean, if you call it a bubble, by definition, it should pop.
The
And
bubbles
we,
pop. Yes.
right, we have seen, even within the last few years, Bitcoin go from nosebleed highs to, 70% losses and then come back and go down and come back. I mean, to try to guess where it goes from here to me feels like folly. You just have to go along for the ride, and you're either along as a long-term holder or you're along as someone like me who just sort of watches and reports on it from a distance.
Yeah, I mean, you said nosebleed high. Now I think we're at brain explosion high, heads coming. Uh,
Yeah, it's
a
yeah.
hundred, $100,000 for Bitcoin. Anyway, let's move on. Last night on the BBC, I was really asked about this move being made. There's a bill in front of the House. Well, one bill's already passed through the House of Representatives, but the other one, the House of Representatives passed a bill saying we're going to spend $1.9 billion dedicating to upgrading the nation's telecommunications network. Now they've added another 3 billion on top of that to make the nation's infrastructure get rid of all of its Huawei and ZTE equipment. Now, this seems to be part of a larger pattern, not just in the United States. I'll get to that in a second, but around the world. I mean, the UK in 2022 announced that all Huawei technology had to be removed from its 5G networks by 2027. Now we're seeing it's going to happen in the US, and it's part of this larger campaign of like taking out Chinese equipment from our ports because of the software and the ability to hack it by the Chinese. I mean, Chinese aggressiveness seems to be having a kind of a nasty blowback on them because we're literally going to embargo, not just put a tariff on some of these products. We're actually not even embargoing them that we're going to rip them out of our existing servers and other communication systems forever, by the way it sounds. Now, this is going to obviously have an impact on the price of, communications because the stuff they were buying from Huawei was a whole lot cheaper than the stuff they'll be buying from the United States. Also, it's going to be really have an impact on smaller telecommunications operations in like the Midwest and the South, because those operations only have a couple million people using. So they're going to really take the brunt because the price is the same for this equipment wherever you put it. So is it worth doing this? Is the risk that great, you think? Or is this a smart thing to do right now?
You know, China is not delivering when it comes to privacy concerns. And so those concerns are around, they are politically viable. Obviously, tariffs are expensive. Isolationism is expensive. And those are the dollar values when it comes to infrastructure. Just
Yeah.
wait till you have to tell your kids and young business people that TikTok is going away for the same reason. That's a
In
different kind of
January.
expense.
Yeah, enjoy
Right.
Christmas and watch all the TikTok you can during vacation because you may never see it again.
Yeah, so this is part of a larger trend. It's going to be an expensive trend, very likely. And I don't know if it leads to a trade war or a Cold War. It feels right now more like there's a Cold War going on where, the US and China don't trust each other. It's politically expedient not to trust China. It's one of the rare things bringing both sides of the aisle together. But that's why we're not only dealing with the infrastructure that you laid out, that probably not a whole lot of people will pay attention to, but TikTok as well. And that is what a whole lot of people will pay attention to.
Okay, well, let's see what happens. I mean, this may be the isolationism, growing isolationism of the world is the countries of the world is becoming a very visible trend. I mean, the idea of the global economy that we all accepted and figured was forever is starting to shatter a bit.
A bit. And yet there's long-term simmering tensions, let's say, between us and
Yeah.
China, two otherwise huge partners when it comes to trade. And imagine that the dollar is just left behind if we put in more tariffs, if isolationism does take over. And that's, in a lot of ways, limiting what could be with these partnerships. And I know that there are going to be companies like Apple that are frustrated, that want to sell a lot of phones over there, or even Tesla potentially trying to sell cars over there, and vice versa. We're starting to get this appetite for EVs. There maybe aren't enough. How about some more? And Chinese companies are making good EVs. I've not seen one on the road here yet.
No,
Why is that?
they're all in
And
Russia.
well, okay, but they
Yeah.
should be here as well.
Uh, okay. Next up, inflation went up 2.7% in November. Okay, it's been pretty quiet on the inflation front for several months, and this little jump is kind of concerning. Do you think it'll affect the Fed meeting next week?
I think the Fed meeting was probably already heading towards an interest rate cut. And this was a very minor jump. It's not quite 2.0%, but it's within the range the Fed likes. So it seems like, and I'm not saying this because of me, I'm seeing this because of the reporting I'm seeing, that the Fed will continue to cut rates. because inflation is as slow as it is. That said, it's important to point out that if inflation slows, it still means there's inflation. It still means that prices are going up. They're just
It's still
going up
being
more
put on
slowly.
top of the past inflation. Yes.
Right. And so people are still seeing higher grocery bills than they saw last year.
Okay.
And yeah.
Okay. So 25 basis points, 50 basis points, 75.
I mean, I try not to get, that's a fool's errand trying to guess, but I don't imagine it's going to be a very sharp cut because look, the economy, I mean, we are almost splitting hairs when we talk about, ooh, look at what the CPI is doing. It's really steady, and inflation is holding really steady. And by the way, that's alongside consistent job growth. Even some wage growth is in there. The stock market is doing really well. If you're into risky things like crypto, you're also making money. So our economy is kind of humming along right now. And I know the perception is, oh, prices are still high. That's what happens when you combine the stimulus of a couple of years ago with job growth over the last couple of years and even wage growth. I don't see any other way. And I know the Federal Reserve, by raising rates, did try to slow the economy, and that seemed to work a bit. Inflation is slow, but it's still here because the consumer is still out there shopping. And that's very healthy behavior for any economy.
Yeah. Any numbers on Christmas sales right now? Are they up this year? I mean, I heard optimistic things. Is it actually happening?
I mean, we did a whole bunch of coverage on, say, Cyber Monday, and that was
Yeah.
a big day. Something like, I don't know, $13 billion or whatever was spent online, in addition to, a lot of action in the malls. So this is certainly the busy, busy season for retail that they need to do well. The surveys seem to show that people are going to shop. A lot of consumers are going to shop. Again, I think that's because people have jobs and even some money to spend.
Okay, so let me give you a terrifying or worrisome scenario. That is, most of the new job creation over the last couple years has been government jobs or part-time jobs. And they get listed. The actual number of full-time new jobs created in our economy is pretty low. Now, throw in Elon Musk and Vivek Ramaswamy going in there with Doge and hacking and hewing its way through the federal bureaucracy, laying off 500,000 people, added to the unemployment rolls. How much damage could this do?
A lot. And one of the surprising things, I don't really know how much there is to cut with this Doge. I mean, a lot of government spending is kind of built in, whether
Yeah.
it's because of our debt or because of our infrastructure and how many people need to do how many of these jobs. But right, if you put a lot of people on the unemployment line, you can disguise that as a new president any way you want. You can say, oh, we're so efficient. Bottom line, you're putting people out of work.
Yes.
They have less money to spend. That leads to a domino effect, and that usually leads to more people out of work. And that is probably number one on the list of things you don't want to do as a new president, because that slows the economy down
Right.
and ticks people off. So part of this Doge thing is, all right, I get it. They're talking about government efficiency and draining the swamp and all that. But if you put people on the unemployment line and slow the economy, call it whatever you want, people are going to be angry. And so I don't quite see where this goes.
Yeah,
At
it's a
some
very
point,
interesting.
someone
I
has
know
to be the
people
voice
are
of,
thinking about this. And if you shut
right,
down the Department of Education, how many hundreds of thousands of people is that? These aren't electrical engineers or programmers that are going to get snapped up by the tech industry. These are people with, humanities degrees and teachers. Where
right.
do they go?
I don't know. I mean, it's not a new idea that there is waste in government. I
Yeah.
don't think we're breaking any news there. But again, I just wonder what happens if you lay off that many people. I just
Yeah.
I don't know. You go back to the Clinton years and okay, there was a balanced budget, but it didn't feel like there were all of a sudden hundreds of thousands of government workers out of a job. It's not like I don't know, DC, Virginia, and Maryland economies suddenly crashed. I don't really know what happened that was, a while ago, and I was younger then. But to be on top of this now as a business reporter, I'm going to be watching this really closely. And I just don't know how you can say, well, we're going to put deep cuts into the biggest industry in our country and call it good and come out as a popular president. I don't see how that works. So I will be one of the many people watching this Doge to see what it does
Yeah.
and where it is told to, okay, that's enough, stop doing whatever it is you're doing.
Okay. The AI effect is still glowing. I mean, Broadcom with his first quarter revenue forecast was way above Wall Street estimates, and its stock has rose over 3% late this week, having gained about 60% so far this year. So it's turning out to be unexpectedly one of the biggest beneficiaries of a rally in AI. Even as Nvidia is kind of worrying people that it's not hitting its numbers quite the same on Wall Street.
Well, look at the last 5 years in the chip industry. NVIDIA has been just absolutely a monster. I
Come on.
think Broadcom's growth is now 9x over the last 5 years. Its stock going from a split adjusted 20 to 180 after the earning report over 5 years. Just staggeringly strong numbers for an industry that used to be just kind of moving along steadily. And then this AI kind of kicked in, and you combine that, and NVIDIA did as well. Also, Qualcomm, another huge success. Broadcom's been in there, AMD certainly, with the mobile, sell everything on cell phones kind of revolution. And we've really looked at chips as the focus of attention. You add in stimulus money from the CHIPS Act, and you've got a lot of these companies that are just doing gangbusters. And I think you're right in looking closely at these companies like NVIDIA. Now that we know they're super successful, how do they perform with the earnings? And actually, they're doing pretty well. It seems like there's a huge appetite for their chips right now because of this latest round of AI. I don't know, hunger, I guess, for lack of a better word.
I love this. It's telling about our time that the headline was Nvidia stocks falls slightly, but now it was number one in the world in value November 1st, and now it fell to the second most valuable, and now I think it's the third most valuable behind Microsoft and Apple. We didn't even talk about this company a year and a half ago.
I mean, NVIDIA's been a hot shot in Silicon Valley for a long time.
Yeah,
It's
in
had a
Silicon Valley, they weren't talking about it on Wall Street that much, or in DC, or in some retirement group in Iowa.
right, but they weren't talking about Broadcom or even Qualcomm.
Yeah.
And yet, boy, have they enriched a whole lot of people. I mean, you look at some of the real tentpole success stories of Silicon Valley this generation, and they're kind of the back. I mean, everyone knows about Facebook and everybody knows about Apple. Those are front-facing companies. But, from Cisco to Sun to Oracle and now to the Broadcoms and NVIDIA, you're talking about the back end sort of foundational companies that make it all happen. And that's really turned sexy over the last 5 to 10 years. Whereas before it was just sort of something that, excuse the pun, sort of chipped away. Good growth, maybe some dividends. Obviously, we needed chips in our cars and our phones and our computers. But now they're just front and center in this AI revolution. And boy, are investors jumping in.
Yeah, well, and I think it's wonderful the amount of wealth that's being created. I mean, by these public companies. I mean, it's spread around. You don't have to be a VC to make money on a public company. You can buy shares of stock, in your retirement account. So, I mean, I think it's marvelous. I also think in terms of competitiveness in the world, I think it shocked everybody, including, our own government, that all of a sudden we're world beaters again. So,
Right,
you
right.
know, that should be enough for a good Christmas. And then finally, okay, now here's news that will have a material effect upon my life. I don't see this very often, but this one will. The Consumer Financial Protection Bureau on Thursday issued a rule to limit bank and credit union lending fees that it says will save consumers $5 billion annually. And you know what the rule applies to? Overdrafts. that is going to cap it at $5 overdraft fee instead of the 35, 40, and all that. That will change my life. Uh, so, you know, bless the Consumer Financial Protection Bureau that the banks can't get us on every rubber check we write.
They're looking out for you, check bouncers.
I'm a
Good.
lot older now, but you should have seen me in my 20s.
Looking out for the check bouncers. Well,
Yeah,
that is a good thing because right, people were losing a lot of money on those.
people are getting ripped off. Okay, that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area. And you can hear me regularly on the BBC starting twice a month now, World Radio Show Business Matters. Have a great weekend. We'll see you next week. Bye bye.